Greetings, members, one and all of the Salivation Nation. We're seeing a drop in gold prices as of late. Been quite interesting to see. This comes to us from Market Watch. Gold has notched a third straight day of a drop, and it gives up its month-to-date gains. So key support for gold remains unchanged, though, at 1320 and 1300, says an analyst. Gold prices on Wednesday finished lower for a third consecutive session, giving up its month-to-date gain, even as uncertainty hung over financial markets, putting pressure on stocks. Gold has lost a bit of its allure over the last week, which may be indicative of a trade that has become a little overcrowded or prone to correction, said Craig Earlham, senior market analyst at Oanda, on a daily note. The momentum indicators certainly suggest that it may be the case that the recent consolidation off the highs, despite some dollar weakness, also suggests there is a move that's run out of steam. April gold fell $7.30 or 0.6% to settle at $13.21 an ounce. It had settled at a 10-month high of $13.47.90 a week earlier. We'll explore that in the gold chart here in a moment. According to FactSet data, weakness in prices Wednesday prompted the metal to trade about 0.3% lower for the month so far. The precious metal, which is perceived as a haven in times of uncertainty, hasn't garnered much support from various potentially market-moving developments, including congressional testimony by Michael Cohen, former longtime attorney to President Donald Trump, the second nuclear weapon summit between North Korean dictator Kim Jong-un and Trump, as well as escalating tensions between India and Pakistan, which has its own nuclear risk attached. In addition, Wednesday marks the end of the Federal Reserve Chairman Jerome Powell's two-day testimony to Congress. Powell on Tuesday delivered a clear message that Fed policy will remain data-dependent, which could mean no more rate increases in 2019. He'd expressed impatience for this year for rates and where they're going to be going. An analyst had mentioned, noting it's a stance that has largely dollar negative and gold positive. Gold was little moved by the data, showing a slump in home prices, though the result reinforced a stand-down approach by the Fed. And U.S. stocks were lower, tracking their international counterparts into the red as the tensions between India and Pakistan unnerved investors. The U.S. dollar index was up 0.13%, edged up by 0.1% to 96.103 for the dollar index. Gold and the dollar tend to move inversely as a more robust buck makes commodities less attractive to investors using other currencies, and vice versa. The dollar aspect is particularly interesting in previous periods of strength, merely slowed or paused by the rally, and those of weakness has spurred it on, said Earlham. If this trend is reversed, then it doesn't bode well for gold in the near term. Longer term, though, it will remain bullish. It's just a question of how large a correction we could see. The key supports here remain unchanged at 1320 and 1300. And I do agree with that. I think that for at least for the moment, I don't think we're going to see gold go below, at the very most, $1,300. Among other metals, silver fell 1% to $15.76 an ounce. Also among the most active contracts, March silver lost 1% to $15.67. The most active June palladium contract slipped 2.8% to $14.77.20 an ounce, pulling back further, settling after a record well above $1,500 on Tuesday. A threatened strike by South African mine workers added to palladium supply concerns in an already tight market, analysts have said this week. I covered that with gold and platinum, but palladium is in many of those same places in South Africa. Palladium is affected as well. Platinum rose 1.1% to $869.90 an ounce. May copper settled $2.96 an ounce, up 0.58% for sure. So very interesting indeed. Let's take a look here at the gold price and the silver price. We can see down at the movements here. You can see here of all these metals here, palladium is the most volatile here, down $33.50 to $214. but still well above $1,500 an ounce. And palladium is making a move upward that could have an effect based off of these strikes that I had mentioned. Although, it could be that they're just now having an effect because the article that I had referenced was over a month old. Um, and it could be that we're starting to see the effects of that, and perhaps the hedges that they had in place didn't work out, or they had expired or run their course. Nonetheless, we move here. Silver is down between silver and gold. Silver is more volatile. You can see it by the percentage. Right here, it's falling down to well under $16 an ounce now, $15.83 an ounce there. And gold is down $9.20. So it's interesting to see how these are playing out with these metals. And it just goes to show you that it's really tough to kind of really predict where things are going with the metals prices. So many things are at play. And even with the geopolitical tensions rising around the world, doesn't seem to have an effect, at least not yet. I do think if the India-Pakistan conflict over Kashmir increases or heats up a bit, we may see quite a move. India is the largest domestic, as far as the private citizens. The more people in India own gold than in any other nation around the world, and I think that's an area we need to watch geopolitically to see what happens there. But it is fascinating, and we'll see how it all plays out. I think in the end, we accumulate these precious metals, as we know. They are hedges against economic instability, but they're also hedges against geopolitical instability as well. They can all play a role in the price, and the us holding gold and silver kind of makes us independent of the system that we're a part of, that we need to be a part of, really, but it protects us from economic instability. It protects us from geopolitical instability, and makes us independent. We hold these precious metals in such a way that when things go bad, that's when they shine, especially when they shine. And so that's what we're going to continue to do. It's all we can do. So post your thoughts about this news, about gold, and where do you think it's going to go? Third straight drop? You think it's going to continue to drop? And I agree with this analysis that it could a little bit, but I think we're probably going to see those floors relatively unchanged. We're at near the first floor, and the first hedge there at 1320, but it could drop below that, but I don't think it's going to go below 1300. And silver, I believe, is strongly above 15. 15 is the floor for silver, I believe, for this year. I don't believe we'll see it go below that, but I think we could see it go above 16 again through to the end of the year, and we shall see. Platinum and palladium are very interesting to look at, to see, not only with this strike, but also to see if there's any retooling in the auto catalyst industry to where platinum is used as the cheaper metal. And we'll see. I think we might see some movement this year, and the price is narrow between these two. So post your thoughts below. Would like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, comment, and subscribe.